In case you've been hearing about the weather that we're expecting in Southern California, which for most of the rest of the country would just be a normal spring rain or winter rain. For us, of course, this kind of rain means a lot of trouble. So far, no big deal where I'm sitting, but I know my sister just said that her gazebo got knocked over up in the San Francisco area. So yeah, we're looking for 60-mile-an-hour wind gusts up there. So, but let's jump into the regular news here from technologyreview.com. A collection of brown pipes emerge at odd angles from the mud and overgrown grasses on a pine farm north of the tiny town of Tamarack, Minnesota. Beneath these capped drill holes, Talon Metals has uncovered one of America's densest nickel deposits, and now it wants to begin tunneling deep into the rock to extract hundreds of thousands of metric tons of mineral-rich ore each year. If regulators approve the mine, which I'm sure they will, it could mark the starting point of what this mining exploration company claims will become the country's first complete domestic nickel supply chain, running from the bedrock beneath the Minnesota earth to the batteries in electric vehicles across the nation. The U.S. government is poised to provide generous support at every step, distributing millions to billions of dollars in subsidies for those refining the metal, manufacturing the batteries, and buying the cars and trucks. The products generated from the raw nickel that would flow from the one mining project, just the one, could theoretically net more than $26 billion in subsidies just through the federal tax credits created by the IRA. That is according to an original analysis by Bentley Allen, an associate professor of political science at Johns Hopkins and co-director of the Net Zero Industrial Policy Lab, produced in coordination with MIT Technology Review, which is where this article comes from. One of the largest beneficiaries would be battery manufacturers that use Talon's nickel, which could secure more than $8 billion in tax credits. About half of that would go to EV giant Tesla, which has already agreed to purchase tens of thousands of metric tons of the metal from this mine. I thought that was a good one to open up on. Hey, this is Randy Kirk. If you like the content and stuff that we do here, please hit the like button. And then, of course, hit I'm almost there. I am almost at 20,000 subscriptions. So if you haven't subscribed yet, I'm not sure why not, but maybe you're new to the channel. Subscription today would be great. Let's get to that 20,000 and then hit notify because, oh my gosh, do I have a week for you guys. Holy mackerel. I have got Larry Goldberg coming tomorrow, where it turns out that finally Cathie Wood did her thing early this morning. We are going to meet first thing tomorrow morning. So around noon tomorrow, Larry will be on and we'll go over all the Cathie Wood report, which I know you guys love. On Tuesday and Wednesday, I'll have Brian White as usual. On Thursday, Warren Redlick will be coming back to the channel. So that's just what we know so far, and it could get better than that as time goes on. I don't know how it's going to get much better than that. But anyway, of course, we also like you to join Patreon because, it takes money to produce this channel. So if you can help out, that would be fantastic. I would certainly appreciate it. And then Cybertruck, bottle openers, those also help the channel. All the information on all that is down below in the description. By the way, did you know that I keep a schedule down in the description? Have you ever gone down in my description? I've got a schedule down there. I've got all the different people that are on the show. I've got their information so that you can find them at different places. All that's every single day. I go to the trouble to put that down there in case that could be helpful for you. Okay. Let's look at some other news here. First of all, you know that I've said this before. I'm going to keep saying it. I think that Elon or that Tesla should allow people to transfer their FSD. If they own FSD and they buy another Tesla, they should be able to transfer it to the next Tesla. And it should be able to transfer it forever, but you should be able to at least transfer it once. Maybe it should be forever. And maybe, okay, charge $500. I don't care. But there should be a way to transfer it. Well, until the end of March, that opportunity exists. So if you're thinking about buying a Tesla Model 3, SXY, etc., if you're thinking about buying any of those cars between now and the end of March, probably want to jump on it before the end of March if you currently have FSD and you want to transfer it to the next vehicle. All right. And they're also going to allow you to transfer your lifetime supercharger. If you have that, you can transfer that also. Now, neither of these things is available on a Cybertruck. maybe they'll be available later when we get down to the regular Cybertruck pricing. But right now, no, neither one of these things are possible. All right. Then we had, let's see, number 2. This was going to be my lead article earlier today. And, the longer I thought about it, the longer I realized it's not a lead article at all, but it does need to be discussed. The Wall Street Journal, of course, has become it's just one more newspaper that if you were buying a newspaper at all, you would now get it at the checkout stand at the grocery store, because they've become, I don't know, some kind of it's not even it's what can I say? Anyway, they got this screed this weekend talking about Elon Musk forcing people, or people feeling like they had to take drugs with Elon Musk if they were going to keep him happy or something. Oh my gosh. And then talking about all this stuff with regard to cronyism and whether or not the board of directors, the members of the board, are too close to Elon, or whether they can be independent, and all this nonsense. There was nothing in the article that was new. Not a word was new. This was the kind of horrific scandal sheet type stuff that you just don't believe that the Wall Street Journal would be capable of doing. But the traditional journalism is going down the tubes really, really fast, trying to compete with X. All right, from Sawyer Merritt. Breaking: Tesla has increased the price of the Model 3 long range in the U.S. by $1,000 to $46,990. Troy Teslike responds immediately. He says this is because Model 3 production at Fremont is down a lot in Q1 thus far because of the +3 or the 3 Plus upgrade. Production has paused until recently. He's waiting for new VIN data to see how production is going now. We've heard this, of course, but we've also heard from others that the Model 3 Plus production was going pretty well up at Fremont. So not sure where the reality is here. In any case, there is an increase. It's always nice to see an increase, and we are definitely seeing that the arrival dates have been pushed out. Whether that's because of demand or because of supply, we don't know, but I'll keep track of that and let you know if I hear anything new. Okay, and then Elon Musk says, I'm hopeful that we will be able to report that the first Neuralink patient is able to control a phone and a computer this coming week. This is pretty amazing that would, or anyway, we'll see what happens. All right, of course, what we do on the Monday morning show this Sunday night, what we do every week, if this is your first time here, is we take a look at what kind of reports are coming up this current week, and how they might impact and what we're kind of expecting. So we start with the S&P final U.S. Services Purchasing Managers Index. The last time it was produced, it was at 52.9, which is a good number. That's showing growth in the services industry. There is not a projected number for this, and that will be out at 9:45 on Monday, so it will not be reported until Monday night, when Larry Goldberg and I will give you the update of the day and on Good News Monday night. So we'll have Larry on twice tomorrow. We'll have Larry at noon to talk about Cathie Wood, and then we'll have him again at about 4:35 o'clock to California time with a report on this, as well as many other things from the day. Okay, then we have Chicago Fed President Austin Goolsbee, who tends to be dovish. He will have a TV appearance. Then we'll have the ISM services analysis, and that one is also expected to come in positive at around 52 compared to 50.6 last month. And then later in the afternoon, Atlanta Fed President Raphael Bostic gives welcoming remarks. I hope they're welcoming. Yeah, then Tuesday, more Fed speak all day long. Fed President Loretta Mester, and then President Neil Kashkari, and then Susan Collins, and then Patrick Harker. And some of these are bulls, and some of them are doves, and some of them are hawks. And anyway, we'll see that we could see the market just flip-flopping back and forth all day long as these people come out. Anyway, then on Wednesday, you've got the U.S. trade deficit coming in on Wednesday morning. That's expected to be just a little bit down from last time. It was 63.2 billion. Is that right? 62. I guess yeah. Okay. And then they're expecting to be down to 62.1. Then at 11 more Fed speak, 11:30 more Fed speak. We got Adriana Kugler, and then Susan Collins again, and then Tom Barkin, and then Michelle Bowman. I mean, this is just sad. I don't know what to expect for this week. All right, then at 3 o'clock on Wednesday, which we will report on Wednesday night with Jeff Lutz, we're looking at consumer credit expected, of course, going from the December month to the January month. December was 23.7 billion. They're looking at an increase of 15.1, so a big drop. We'll see how that fits in with normal expectations this time of year. Is that's about normal, if that's a lot. And then we have the CBO briefing on the budget and economic outlook. That will also be on Wednesday afternoon. Okay, then on Thursday, initial jobless claims comes in after the big beat last. There was way more than expected last week at 224. They're expecting it to stay about the same at 220. They haven't been even close to right for the last 6 weeks, so I don't even know why they're guessing anymore. You can say the same thing about me, right? I was right once and never again. Anyway, we've got wholesale inventories coming out that morning as well. That's expected to be significantly up. It was down last month, 0.2%. The last I've been hearing, now I understand why they might expect that January we would see, or December actually, we would see, no. So this is the December report. It really reports late. So they're expecting that to be up 0.3% month over month. And all the reports I've seen recently said wholesale and retail inventories were still very strong. But that's back in, I don't know. We'll see what happens on that one. And then on Friday, you have the CPI seasonal factor revisions. Never paid any attention to this report before. So we'll talk about that Friday morning, see what's happening there. There's a couple of more Fed presidents, Tom Barkin speaking again, and Lori Logan speaking again on Thursday and Friday. Okay, speaking of Fed presidents and whatnot, Fed Chairman Jerome Powell was on tonight on 60 Minutes, and here's a little bit of that conversation that I thought was relevant. This is from the transcript. Pelly asks, we're not going to see bank failures across the country as we did in 2008, ? Powell, I don't think there's much of a risk of repeat of 2008. I hope not. I also think, we need to be careful about making proclamations particularly about the future. Yeah. I think it's easier to make proclamations about the past. Anyway, things have surprised us a lot, but no, at this time, I do think it's a manageable problem. I think we're going to be able to manage it. It doesn't sound strong. All right. There will be some banks that have to be closed or merged out of existence because of this. That'll be smaller banks. I suspect, for the most part, these are losses. It's a secular change in the use of downtown real estate, and the result will be losses for the owners and for the lenders, but it should be manageable. Okay, so he's seeing banks closing, banks being merged the rest of this year, but he thinks it's manageable. Anyway, I think that's super important. Pelly asked then, one of China's largest real estate developers just went bust, and I wonder how you see the Chinese economy. Powell, the Chinese economy is meeting some challenges now, obviously, and the growth has slowed. They've gotten away from the market-led growth model. It's more about state-owned enterprises now, and it's still too much associated with real estate investment and things like that. And you're going to see issues around commercial real estate there. So the question is, how much does that matter for the United States? We have our economic relations with China, which are important, but they mostly consist of, buying Chinese manufactured products. So our financial system is not deeply intertwined with theirs, although they've been selling off bonds like crazy for the last year. Our production systems are not deeply intertwined with those. So as long as what happens in China doesn't lead to significant disruptions in our economy or the financial system, then the implications for the United States, we may feel them about, but they shouldn't be that large. Okay. Obviously, a lot of American companies that depend a lot on China have been moving some of that dependence out to other places. There are also a lot of companies that have a very substantial business operations going in China, and or a lot of their retail sales or wholesale sales are in China. So I don't know what, maybe Powell doesn't do a deep study of China. Maybe that's not part of what he does. Anyway, let's take a look at where the markets are now, and in particular, the bond market, which I've been a little bit shocked at. Okay, we are now sitting on the 10-year bond at 4.079. That's up almost 5 basis points in the pre-market, continuing to struggle in this 3.8 to 4.2 range. I am surprised to see it up. I don't get it. I really don't understand it. And pretty much the rest of the long-term bonds from the 2-year all the way to the 10-year are all up. Some of them even more than that, which is increasing the yield again. I'm sorry, the yield inversion again. I don't know. Don't know how to explain it. You've got the short terms are up also. So everything's up on that. I guess continuing to feed off of last week and worried about what the Fed speakers are going to say this week, as opposed to looking at the inflation number. Okay, let's look on, go ahead to the oil patch. We've got that basically even at 72.32. No real, that's very, very low given everything that's going on right now. Natural gas up 1%, still sitting at 2.1. It's not really moving that much. We have gold flat, silver up a little. I mean, I'm sorry, down a little bit, down 40.42%. We've got copper basically flat. The dollar up with these interest rates going up. I'm sorry, the treasury is going up. Then you're definitely going to see, the dollar go up. So the dollar is up right now. We have Bitcoin 736 down to 42. Been in that same range for quite a while now. Now let's look at the equity markets. You got the Dow stock futures. Let me look at the right place here. All right, the pre-market, the Dow futures are up. I'm sorry, down 66, down 66. That's down 0.17. S&P down 12.25. That's down 0.25. And the NASDAQ down 51, that's down 0.29. So all three down in the same range of about 0.2%, that kind of area right there. So looking like the interest rates continue to go up on the treasuries is probably part of the reason why all of the equities are going down. And maybe it's just partially due to the overall maybe being out a little bit oversold, given the earnings not coming in quite as strong as I think most people were hoping for. You might want to listen to it also. Pretty interesting on Writer with Herbert. He just interviewed a technical analyst. I don't have his name in front of me right now, but this technical analyst was saying that he is expecting the S&P to go down through March, April, also expecting Tesla to go down through March, April. And then he says after that, he thinks that the market will go up strong all the way the rest of the year, and then go up strongly into next year as well. And that Tesla also could, if it should go strong after March, should go very strong, possibly breaking through 265 and going back to all-time highs. So I thought that was kind of interesting to listen to that. And again, you might find that interesting to watch. Also, I was going to look real quick here to look at what the inflation rate did today. Still sitting at 1.41. So for now, we've got 5 days, 3 days of under 1.5. I don't know why interest rates are going up. I don't know why Chairman Powell is even contemplating not dropping rates when you've got that continuous situation taking place. Can't figure it out. Okay, so early this morning, I did a video responding to many of your most important comments and questions that you've had during the last week. If you didn't see that, I'd suggest you go check that out, and I will put a card right here. And remember, Larry's on twice tomorrow. He's on around the noon hour to talk about Cathie Wood. He's on to bring in the night when we talk about all the good news of the day. And then Brian on Tuesday and Wednesday, and then Warren Redlick coming back to the channel on Thursday. I will actually be on his channel as well, maybe tomorrow. Not 100% sure exactly when he is going to produce that. All right, so that's all I got for you right now. As always, of course, sign up for the Cybertruck. Get yourself some Cybertrucks and sign up for Patreon. And yeah, and hit the like and subscribe and all that stuff. I am really looking forward to tomorrow. It's going to be a lot of fun. And it's been great talking to you.